This is a very large asset class. In fact, it's larger than the aggregate market capitalisation of the entire FTSE 100. It's larger than the sum aggregate of all UK government bonds, and it's over twice the size of commercial property. Now, what we're saying is this asset class will see volatility. It goes up and it goes down. Our director of property has invested through two cycles in his career already. But what we do is we allow investors to invest in a more efficient way. They can diversify their investments across a range of different assets, which allows them to diversify the specific risk associated with one asset, such as a tenant default or a major issue related to that. And then the second aspect is that you can diversify over time. So if you bought a direct investment, you could buy at 1 minute to midnight, peak before the crash, and you wouldn't know. Actually, the smarter way to invest in property, as professional investors do, is to invest through the cycle and to keep doing that. We have been looking at commercial property, but the thing that stopped us launching it sooner is the fact that it has a very different risk and reward profile, and we're nervous about people just buying yield without being mindful of the underlying risk of that yield. Residential property doesn't have the same level of risk. You can very quickly get a new tenant, even though the tenant doesn't have the same covenant strength. The volume of tenants outweighs the challenge there. The value of a residential property doesn't depend on the financial security of that underlying tenant. The lease can be broken. We've got the benefit of the AST, which is very flexible compared to, say, Germany with a residential property that once you put a tenant in, it's very difficult to remove them. So all of these reasons mean that residential property is very easy to value, it's very easy to understand. Commercial property is appealing as an asset class. It's certainly appealing to our investors, but we're not willing to do it until we can find a way to package it appropriately. In the UK alone, estimates vary, but give or take 20 billion invested annually in the private rented sector. And most of it is from a direct investment from the cottage industry of buy-to-let rather than professional investors. So that's the size of the market just in the UK that we are shooting for. In terms of individual investments, we need to keep that at a size that's appropriate for our base at any given time, but there's no reason why we couldn't be doing entire large-scale development blocks, build-to-rent, and other aspects that today are the preserve of very large funds. But we're already arguably the UK's largest publicly available residential fund in the space of 15 months, and we are on a growth trajectory that hopefully would see us doing ever larger transactions. Globally, the theme of property crowdfunding or real estate crowdfunding is an active one. There's lots of operators popping up. No one in the world is really doing what we're doing around a trading exchange, so we'll see more of that to come, I believe. But there are platforms that pair investors with opportunities for fixed-term investments purely. We are the largest in the UK by quite a way, but we think of our competitor, as I mentioned, as direct investment, and in that sense, we are a mere decimal point in the grand scheme of that market. So we've got, a lot of room to be moving. We need to think more about a wider awareness, how we can build trust with our customers to move to this new form of investing.